But I thought we would start with the stock of the day, which is Netwealth. We'll get the data up on screen. So funds under management, funds under administration, inflows going really well. Strong markets helping that. You can see these are just quarterly numbers. Funds under administration up by 6.7 billion in the quarter. But interesting to note, the cash account balance is down on the average for the first half. And they're actually seeing a reduction in average quarterly revenue, and that's because of its fee structure. Watching margins falling, we need to think about costs and how they can be managed. So the big question with Netwealth, guys, and you can see the share price reaction to that news today, down by 5.6%, is for a company that is priced for so much growth going forward. Does the data that we're seeing come through today really justify its valuation on revenue and earnings front?
I think that's what most of the down move is today. Hub24 has also taken a bit of a hit, I think, as well. So overall, we're talking about companies with 50 plus PEs, and realistically, compressed margins is never a good thing. But the overall, obviously, the fund numbers and things looked pretty decent to me. But look, compressed margins, obviously those super high PEs, that's where these higher interest rates or higher bond yields are going to really start to bite. So, and look, we've had a really good quarter. Maybe this is sort of priced, I guess, a little bit to perfection. I certainly wouldn't be, with a 75 odd basis point rise in yields in the last sort of month and a bit, or six to 8 weeks probably. Something this expensive isn't really on our radar at the moment. So we would be selling this. It's not in our portfolios, but I think you'll probably get this at cheaper prices down the line. And look,
if you've written it up,
I think you'd be definitely trimming or taking profits. I'd probably just bank it at this stage, but. The numbers are still good. You just likely get it at cheaper prices over time.
Got it. Thank you. What about you, Daniel, when you think about Netwealth?
Yeah, so last time I was on the show, Nadine, and we spoke about Netwealth, I actually kind of flagged this issue. The fact that a lot of market participants really look at kind of quarterly movements and flows and net flow in particular. But the real figure you should be looking at is, I guess, the number of accounts, and the attraction of new advisors onto the platform is of course, what's the biggest new revenue driver given that tiered fee structure. So the company historically hasn't done, I would say, the best job calling that out in their quarterly reports, but they did have a big dot point in there today, giving a bit of a warning to the market, saying, like you mentioned, hey, perhaps don't expect this massive increase in market movements to be, reciprocated in revenue as well. So I think that's plaguing into today's move as well. And as well as the fact that, look, we love these businesses, been in them for a long time, but it probably has reached, in our view, at least the peak growth rate. So they've already kind of penetrated, I guess, not necessarily the easy wins, but the direct customers that they've been targeting. And now it's going to be a slower burn over time. So similar to what Mark said, that there is a large multiple on this business, and we do think that it's still very high quality. We don't think the business metrics will break down, but that rate of growth is likely to slow a little bit unless you start to see wins in their new platform products, which obviously will attract higher revenue. So for us, we've actually been trimming in our managed funds as well. So I would call it a trim, but yeah, certainly probably not exiting the stock fully, because it is a fantastic business, but managing risk at this point in the cycle is front of mind for us.
Okay. See, knowing when to crystallize some of your earlier gains is just as important sometimes as knowing when to buy. And I think that's something that, we're so keen to get buys from all of our guests, not personally, but, viewers are, that sometimes it's actually the strategy involved in knowing when to get out as well that's really important. So thanks, guys. Thank you for that.